Greater China Real Estate Market Outlook 2019, CBRE. A forecast summary, 6 key points to watch out for. China-U.S. trade dispute. As the trade tensions continue to weigh on the regional economy and the property market, mainland China, Hong Kong, and Taiwan all saw manufacturing PMIs drop below the 50-point threshold. Many companies are considering moving production out of mainland China or rethinking supply chain strategies. With the reshoring trend gaining steam, Taiwan saw increases in the demand for industrial land and properties. Taking into account the subdued economic outlook amid prolonged trade dispute, office demand growth is accelerating in China's coastal cities. Hong Kong's property market is under pressure due to the economic uncertainty and stock market volatility. Will rapid expansion in tech sector continue? With the slowdown in mobile internet user growth and deleveraging efforts weighing, tech sector experienced declines in both funding and hiring activities in the past year. The overall office demand growth from the tech sector is forecast to weaken in 2019. But the subsectors including AI, cloud computing, and 5G are expected to see fast-paced growth. The resumption of online game approvals and the launch of a new tech board at Shanghai Stock Exchange will also give a further boost to the sector. Science and technology research companies will continue to drive demand for data centers and industrial facilities. Co-working sector to underpin office demand. In 2018, the office space leased by co-working firms totaled 500,000 square meters across Greater China, up nearly 200% compared with 2017. After being swept up by a wave of consolidation, a few top players are taking the dominant share of the market. In major markets such as Beijing and Shanghai, nearly 40% of co-working operators expect to expand at a moderate pace in 2019. In terms of site selection, 78% prefer core locations, while in Hong Kong, the decentralized areas where new supply is concentrated are attracting strong interests from co-working firms. New logistics hubs set to emerge. With the vision of city clusters and the Greater Bay Area initiative coming into focus in 2019, infrastructure projects will be sped up to drive market integration and economic development of the Midwest region. The Greater Bay Area will be on a fast track to tremendous growth, supported by infrastructure improvements and growing presence of e-commerce companies. Key cities in the Midwest and the Tier 3 cities in the coastal area are set to see the emergence of new logistics hubs. Integration and brand collaboration remain key themes. Digital integration and brand collaboration remain the key trends shaping the retail sector in 2019. Retailers will make greater use of technology to deliver integrated omni-channel experience. Tech innovations such as Cloud Shelf, facial recognition payment service, and robot restaurant will be increasingly adopted to boost efficiency and create new experience for consumers. We will see malls move away from being solely retail-focused to include co-working spaces and takeout restaurants. The GBA will continue leveraging its unique advantages in infrastructure connectivity to drive tourism and retail growth across its cities. Investors facing both challenges and opportunities. Given the uncertainties facing the economy, we are cautiously optimistic about the outlook for the commercial real estate investment market. As the private equity real estate fundraising activities in Asia-Pacific have been brisk since 2018, and the PBOC continues to tweak the liquidity tap by lowering the required reserve ratio, an uptick in demand is likely to be seen in the investment market. Commercial real estate with value-added opportunities in the Tier 1 markets will remain sought after. Logistics facilities, data centers, and apartments for lease are best suited for mid- and long-term investments, underpinned by government incentives and positive market sentiment. Some strategic regions, such as the GBA, will become preferred destinations for both domestic and foreign investors as the investment prospects look very promising.